The Federal Reserve recently cut the US interest rate for the first time since March 2020. This cut may be the start of an extended rate cut cycle, with expectations now being that by the end of 2025, the federal funds rate will be below 3%, with over 2% of cuts expected in the next year alone. Now that the Federal Reserve has begun cutting interest rates, the question arises as to what impact that might have on the US economy, specifically the stock market. Now, the chart here highlights the performance of the S&P 500 after the Fed's first rate cut over 1, 2, and 3 years. Now, what's interesting to note is that in the first 3 instances where the Fed's first cut was 25 basis points, the S&P 500 returned an average of 19% in the first year after the cut, rising to an average of 55% in the second year and 57% in the third year. However, while the 2 instances where the Fed's first rate cut was 50 basis points show a negative 3-year period, it is important to note that in both these instances, the US economy was in a recession. The key point is that historically, a 25 basis point cut has not adversely affected the stock market and could potentially facilitate further growth in the US. For more insights such as these, please visit our website www.csprayprivate.ie.